Hello there, I'm Joseph Quijano with Become the Banker, and I want to welcome you to our office in Centennial, Colorado. Here we have our reception area, and over here we have our client conference room, and then we have a beautiful training area, not only for financial advisors, but also for our client. Hello there, I'm Joseph Quijano, Certified Financial Planner with Become the Banker.
And I'm Jordan Quijano. As you just saw, we introduced you to our home here in Colorado, but we want to take it a step further, really get into the depths of how you should be building your financial pyramid so that you can secure your portfolio and just make sure you're making smart money moves.
As some of you may know, I was born in Mexico City, and Mexico is known for many things, but two major things. Number one, we have pyramids in Mexico, and number two, we have earthquakes. Now, every time that there's an earthquake in Mexico City, the modern, beautiful buildings come crashing down. Yet, the pyramids, over 200 and 300 years old, are still standing. And you may be asking why. And that's the purpose of today's video. We want to share with you that creating wealth without any risk doesn't need to be complicated. I think too many of us make making money too complicated. It doesn't have to be like that. Every time that we meet clients, we ask them to show us their financial pyramid. And if you can see that pyramid right here, it is totally full of risk and taxable. So most of our clients' financial assets are what? At risk and taxable. That includes like stocks, mutual funds, 401ks, IRAs that are invested in the stock market. Ladies and gentlemen, this money is at risk and fully taxable. This is where people have their money.
A majority of it at least.
Yes.
Now the middle section, this is more your taxed managed kind of assets. We're talking about like real estate, individual properties that you may rent or own, that you're gonna sell and pay capital gains on. We're talking about individual stocks, individual bonds, away from the 401ks, away from the retirement accounts, that again, you're gonna be taxed at a capital gain rate, which today is about 16%. So much better than the ordinary income, which can be well over 30% if you're making quite a bit of money. Whereas 16%, this is where the wealthy have taken great advantage of this to try to build as much assets as they can and only pay 16% versus the other assets that are over the 20s and 30s.
We'll really like to do is we like to create a pyramid that the majority of your assets are on the bottom. This is the key as to why the pyramids in Mexico never crumble down. That means that a foundation of the pyramid has to be wide and strong, really wide and strong. And this is what we try to build at Become the Banker. We try to give you tax-free vehicles and strategies with absolutely zero risk. Now, how good is that?
And this is kind of what will withstand those storms. You know, when it comes to any economy, we know stock markets will go up and they will go down. We know taxes will probably end up going up and hopefully go down, but we haven't seen that yet, where this foundation, that is the key, that if you have most of your assets, most of your money tucked away into this safe guarded area, then you don't have to worry about what could happen with taxes or with that risk. And this is what we call a sound financial pyramid. If you have something that looks similar like this to your financial pyramid or your financial assets, then you're doing pretty well. You've got a very well balanced portfolio. And that is our whole goal today, is just to help you balance your buckets, or in other words, balance your sections of the pyramid so that you can have a strong foundation for any economic storm.
So let's do an exercise right now. Those of you watching at home, please follow along. Take a sheet of paper and a pen and just go along with me during this journey to see what you have in the different levels of your financial pyramid. Now, the first level we talked about is full of risk and full of taxation. Okay, so some of the products that go there are actually retirement accounts, like 401ks, IRAs, any qualified plan will go into here. And the key is, I want you to know that your hands are tied with those plans. That means that the government is mandating when you need to take the money out. So like if you invade this level before age 59 and a half, guess what? You're gonna lose 30%, 10% in penalties, and 20% in taxes. So just think about this. If you had $100,000 and you needed to invade that account because of the pandemic or any other reason that you needed the money, you would lose $30,000. So you would only net $70,000. Now that is terrible to me. Secondly, if you turn 72 years old now, you're mandated by the government to start taking your money out because they cannot wait to get their taxes. So you're not going to be able to stash your money there. At age 72, you have to take out required minimum distributions so you can pay the tax to the government. Now, the sad part, Jordan, is actually that upon your death, if you happen to pass away, those left behind will have to pay ordinary income taxation to inherit this money. How sad is that? So, to us, we believe that this should be the smallest part of this level right here, the smallest part of the pyramid. It should not be the biggest, it should be the smallest. But unfortunately, most people that we meet, this is their biggest part.
And that could be somebody's only account are those 401ks and IRAs. So you're spot on. Now let's move to the second section, which is what we call the tax manage area. This is where you have lower risk based off of what investments you may have, stocks, bonds. We're also talking about real estate that you may be owning, not only your personal residence, but what you're also renting out. This is the area that's taxed at capital gains, which is 16%. But as mentioned, you have your homes, you have your stocks, and of course bonds. Whether it's short-term, long-term, it's all gonna be in that capital gain area. But most people should really be balancing this portion of their portfolio and actually have most of their risky money here. You know, when at the end of the day, if you look at it, a 401k and an IRA is great. I mean, really just 401k if you get your match. Get the match, take the free money. But other than that, you're really just putting it at risk, at the mercy of the market and at the mercy of the government, at whatever tax rate they would like to tax ordinary income at. Well, if you're still okay with some of that risk, why not put the risk here? Get your match, but anything over that, you should be putting your risky money in this area because you're getting a better tax at capital gains. And this is very important when you look at selling all of your assets. So inheritance is a part of this as well. Your loved ones will still have to pay capital gains when they inherit it. It's not going to just go away, unfortunately. But this is where our third section, the tax-free area, which should be the foundation of your pyramid, is absolutely tax-free and risk-free. But I hear all the time, oh, I've got a 401k or I've got money in the stock market. That's my savings if I ever needed to get to it. That's not savings. That's at risk. You could lose it. So we're talking about truly savings and our vehicles that we love, which is called the Become the Banker account and the pension account. That's something that's going to give you protection from any stock market downfalls. Both of these products have nothing to do with the stock market. You're able to grow your account with the pension account when the market's up, but when the market comes down, you don't lose any money. You lock in your earnings. Where the Become the Banker account gives you a guaranteed steady Eddie growth of 4% tax-free. And on top of that, most companies are offering dividends that run around 1 to 2%. So you get closer to about 5 or 6% tax-free on this side right here. So when you have the Become the Banker growing at a guaranteed rate of return, and you have the pension account growing when the market's up, but you never have to participate on the downsides, this is why the foundation of your financial pyramid is completely risk-free and tax-free when you're looking at to become the banker.
So ladies and gentlemen, I hope that you really have gotten something out of this video. We believe that education is power. Without power, without being educated, we're not going to be able to get ahead financially. So I'm going to ask you to please go to our channel, subscribe to our channel, or give us a call and just let us know that you would like to have us review your financial pyramid. We will be very happy to do so. Again, I'm Joseph Quijano.
And I'm Jordan Quijano. Thank you, and we'll see you on the next video. Please like, subscribe, and put on that notification bell because we're going to have many more videos coming your direction. We'll see you soon.